Ladies and gentlemen, welcome to The Scoop. I'm your host, Frank Chaparro, Director of Special Projects at The Block. We have a very exciting episode of the show for you today. We have joining us on the other side of the mic a guest who can share his perspective on the state of the market, Matty Graham. First time on the show, first time caller, but not a first time listener. We're excited to have you on the show, my friend. How are things going? Obviously, you guys are now operating a liquid fund, so this is a good time, I guess, to be in a liquid market. We just had Split Capital on, so I'm excited to have another liquid capital allocator joining the show to talk through markets. And then, of course, this really interesting report that we have out of you guys on the state of the stablecoin market. So walk us through maybe how you guys have been positioning the fund, let's say since launch, and what sort of market dynamics are you paying most attention to? Are we experiencing a shift here, right, with this maybe regulatory headwind subsiding?
Sure. So I think that the first thing, if you're in a liquid fund, the first thing you need to do is to take kind of a top-down framework and make an assessment of whether it's a risk-on year or a risk-off year or more of a mixed picture. Because I think that we all know that throughout the storied history of our industry, there are very substantially pronounced bull and bear market cycles. And we could go back and forth about whether or not those happen, at 4-year intervals. But I think it's just enormously important to start with that framework. We continue to think that 2025 is a risk-on year, and so we're positioned accordingly, basically as the headline. And then you might imagine that we're continuing to be super bullish on ecosystems like Solana, but not just. I think a lot of things that are happening on Telegram, on Ton, for example, are enormously important. So that to me, I mean, talk about builders. Pavel, not just in our industry, but any industry anywhere in the world, Pavel, the CEO of Telegram, is one of the best builders around. And he's built a platform that has 800 million users, almost 900 maybe. And for him to be integrating USDT in-app, I think that's an enormous signal of the importance of our industry. And I think that the ability of that ecosystem to bring our industry to a user base of that size is almost unmatched by any other opportunity in our system, in our industry. So we're really looking at a lot of different things, but it all starts with the fact that we view this very much as a risk-on year.
So there's an interesting segue that we can make here from the regulatory potential turnaround that we're seeing and stablecoins, and that is manifested in the remarks of our former Speaker of the House, former vice presidential candidate. I can't remember his name. Paul Ryan, wasn't it? Who was the speaker of that? Yeah, Paul Ryan. Because then there's also Tim Ryan, who's a congressman from Ohio. Okay. Anyway, policy listeners of the show are going to be very disappointed with me. Former Speaker of the House, Paul Ryan, he is now, I guess, an advisor to Paradigm in some capacity. He spoke, I believe, on financial media yesterday talking about the stablecoin bill that is kind of working its way through Congress. And he laid out the bull case for stablecoins, saying that it has the potential, once you have the regulatory clarity in place, to be a trillion-dollar market that reshapes global bond capital markets. That is pretty wild to me, to have a former Speaker of the House basically like bull post, not on Twitter, but on CNBC, the potential of stablecoins. So he's kind of singing the same tune that folks like you, Matty, have been singing for quite some time. So it's I think if you think about stablecoin specifically, we've reached this really interesting moment where the potential is reaching a point where it has now permeated outside of our industry. But let's leave that context aside for a second. Let's start with the state of the stablecoin market. Talk us about why you did this report and the key findings.
I would start with this. I think stablecoins are the most underrated topic, potentially most underrated topic in our industry. So I would start with talking about why that is. So for one thing, frequently when people talk about crypto, one of the things that they push back on is, oh, it's been so many years. Where is the actual product market fit? And stablecoins are such an amazing response to that because absolutely one of the best examples of PMF that you'll ever see, not just in crypto, but anywhere. You have almost 100 million people all around the world that use stablecoins. Um, and, um, and they're using them for a wide variety of applications, and they're very integrated into all different types of commerce, from remittances to everyday transactions to inflation hedges and things like that. So first of all, I think it's interesting because of that PMF. Um, and then secondly, it's for many years it's been my favorite way to start when people are trying to understand TradFi people types. They're trying to understand what exactly is crypto. It's been one of my favorite ways to kind of start that conversation with a specific example. And stablecoins are so useful for that because you can take that conversation in so many different ways depending on the audience. So, for example, with a TradFi type person, you could take that into a conversation about financial plumbing and T+1 and things like that, and they can start to see the connection between a fundamentally different and better type of technology and how it could have those applications. Whereas for my mom and my sisters, I can talk about, hey, I can send you money from where I am today in Shanghai, and I can send you money in Connecticut, and I can do that in 20 seconds or less. Uh, and I can, for a nominal fee, it could be anywhere from a penny to any amount of money, and we can do that instantly, and it's super easy to use. So you can take that conversation in a lot of different ways to start with a specific example about what are the kinds of things you can do for crypto, and then you can kind of widen it. You can go in different directions from there. But there are so many other reasons too. One of the most fantastic, and this is so underrated, one of the most fantastic business stories that I can think of is Tether. Tether is throwing off billions of dollars per quarter with what, 100 to 150 employees. This is one of the best businesses in the world. Now, whether or not that's going to, they're probably not going to be able to sustain those margins on a long term basis because that's partly an artifact of the fact that they built a business in a zero interest rate environment, and now people are going to try to eat away at those margins. That money comes from the fact that they're clipping all that interest. But the fact is, that's an astonishing business story. So that's another kind of an example, also about why I think stablecoins are so interesting. I don't know if you had any follow up there so far, or I can definitely keep going because this is a favorite topic of mine.
Well, what do you think? Do you think that sort of that profit opportunity or the sheer amount of money that Tether's making is part of the reason why you're seeing this race to launch, I would call stablecoin adjacent like products like Biddle by BlackRock or similar types of products?
I absolutely think that's the case. I think that we're one of the next points that I had about why I think stablecoins are such an interesting topic is that what we're seeing right now is an explosion of innovation, to your point. And for sure, one of the reasons is that um, the fact that we are now in an interest rate environment, a fundamentally different interest rate environment, means that there's a profit opportunity there to be captured. And actually, to your point, Build by BlackRock is a truly fascinating example. It's a uh, even though the amount of money in that system is still small, it's a nascent product. But if you think about who the natural issuer of stable coins would be, it probably could be a couple different types. There could be a fintech company, there could be a crypto native company, but also you could start to think about, well, what actually are stable coins that pay interest? That's a money market product, right? And so you start to think about the companies that are in money market products, and who is the natural issuer of a stable coin that pays yield. And BlackRock is certainly one example of that. So I wouldn't count out um, products by our prestigious TradFi institutions, not necessarily BlackRock, but it could be Franklin Templeton or other forward thinking companies. They have really a big opportunity in front of them, too. So the explosion of innovation is tremendously exciting in stablecoins, and I think that's going to continue for the foreseeable future because the amount of money that's being thrown off by that, by being able to clip that yield, is considerable, obviously.
100%. One part of this story that I think is fascinating that you note in the report is the rapid adoption of stablecoins in emerging markets. We had Paulo of Tether join the program yesterday. He was tuning in from Bhutan.
Oh, wow.
So obviously, this is a global operation where they're seeing much of the adoption, outside of crypto in emerging economies and emerging markets. What factors do you think are contributing to this usage? What are the key drivers behind this trend?
Sure. So it's so fascinating because we talk as people. I guess I have to include myself as crypto native now since I've been in crypto for a while, right? So as crypto native people, about we talk about for many years we talked about Bitcoin as an inflation hedge, and I think that we have gradually seen that the overwhelming evidence is that in inflationary environments are not good for Bitcoin, right? But for many years we talked about that. But what we're and also frequently we were having American conversations about that. And here's what I mean by that. We were talking about, oh my God, what if inflation hit 9%? That'd be crazy, right? And then we were arguing about, oh, did they change the components of the index? Maybe it's already 9, maybe it's higher, right? But here's the thing. In places like Argentina, they're talking about 9% a month. And when they're talking about inflation hedge, their inflation hedge is USD. They're not worried about, single digit inflation per year. And they're not thinking about Bitcoin as an inflation hedge, which is a risk on asset, which is negatively impacted by global inflationary environments. Their first thing is, how can I get USD, a hard currency? So what's actually happening, one of the best use cases, and to me it's just so fraught with irony, but one of the best use cases in many of these emerging economies, Argentina being a great example, is inflation hedges, stable coins as inflation hedges, even without being able to clip that yield. Even if you can just get into USDT, that's your inflation hedge. And from the perspective of 9% inflation a month or whatever it may be, in some of these places, that's an amazing inflation hedge. You're not super terrified by single digit inflation in the United States. That's not quite your pain point. So I really think that that's quite fascinating, especially considering the some of the underlying irony.
There is a bit of irony there, but it's interesting because exactly what you said was sort of the one of the positive attributes of stablecoin adoption, as described by Paul Ryan. He views stablecoins as a massive tailwind for U.S. dollar dominance, and if you have stablecoins being adopted globally in emerging markets, that is effectively adoption of the dollar, and it is effectively going to create demand to purchase U.S. debt in the form of treasuries.
100%. So let's unpack this a little because that's such a fascinating point too. So I think there's a whole conversation which is probably beyond our scope. There's a whole conversation. I know some people in crypto have the opinion that that USD hegemony is somehow a negative, and I do agree with statements like you have to ask questions like U.S. dollar dominance. When you say, is it good for the United States? Your next question should be for whom? And you could talk about middle class and stuff like that. And it's really complicated really quickly. I think that's probably a little beyond our scope. I'm not a professional macroeconomist, macro econ guy. I start with the assumption that USD hegemony is probably overwhelmingly good for the United States. This is my perspective as an American. So I'm just kind of putting that out there first. Because again, some people would disagree with that. I know Nick Carter, for example, I think is not a big proponent of USD hegemony. Okay, so then the next thing is, I would make the case that in terms of putting crypto aside for a moment, I would make the case that people are significantly underestimating how precarious USD dominance might be. I think that there are a lot of people who are working really, really hard on undermining USD dominance in countries like China and Russia, but not just. I think there are a lot of people who really want to chip away at the foundations of USD hegemony. And I think that I would make the case that it's probably far more precarious than it might appear. Things like this tend to change little by little, but then all at once, as with many things, right? I would make the case that the status quo path that we're heading on, putting crypto aside for a moment, is towards a multipolar world in terms of currencies. So, euro, renminbi, and United States dollar, and maybe it gets a little more complicated beyond that. But that is a more likely picture 10 years from now versus just the state of USD hegemony as it is today. So I would next make that point. So then what's interesting is that crypto, with its stablecoin picture being overwhelmingly USD centric, and with our current path, the way our industry continues to grow by orders of magnitude, including stablecoins, I would make the argument that from the perspective of someone like myself who thinks that USD hegemony is overwhelmingly a positive for the United States, one of our very best ways to prolong and increase USD dollar dominance is to lean into the use of stablecoins. This is a new technology that is continuing to experience hockey stick-like growth. It's a 2.5 or 7 or whatever we are today, $1 trillion industry that within 3 to 4 years almost certainly will be 10 plus. And this is a USD denominated industry with respect to stablecoins. If you want to have a frontier economy, if you want to talk about a frontier technology that is going to be eating market share from other types of money and that is overwhelmingly USD centric, this is it. So I would actually agree with a lot of what Paul Ryan. This is like the first time I've ever agreed with Paul Ryan, but I would agree with a lot of what he's saying about the potential importance of stablecoins to USD hegemony in the United States and in the interests of the United States. I would strongly agree with that. Believe me, I really, truly can't believe I'm agreeing with Paul Ryan. That's the first.
Hey, at least you can say his name properly. I can't. I mix them up. I mix my Ryans up all the time. So I mean, this is what I on one side, right? Like it does seem like something that everyone should potentially see the benefit of from a political perspective, right? Because there's also a role that stablecoins can play in enhancing financial inclusion in emerging markets, which is something that the report touches.
I agree. This has mystified me for many years. I think it's not a huge secret that I'm especially for our industry, I'm probably way at the progressive side of the spectrum. This is probably not a big secret. Although, I'm more centrist in terms of society, American society at large. But for our industry, I'm pretty liberal. But the point is that from that perspective, I have always been basically mystified because I see this as a fundamentally democratic, inclusive, egalitarian technology that is absolutely fantastic for people at the fringes of society, disadvantaged people, all kinds of situations that really are progressive, fundamentally progressive at their core. So I've always been kind of mystified by this. I think part of it probably has to do with the origin stories of our industry, which were extremely libertarian. I'm sure that's part of it.
I'm sure there's some culture war aspects of it as well. Like,
for sure.
I'm sure a lot of folks on the left just view crypto as a bunch of white men making a lot of money.
Yeah, I'm sure that's part of it too. But I have always maintained that this is a fundamentally small d democratic and egalitarian technology, and so I have always thought this is something that progressives should really embrace. And I'm clearly in the wrong on this, but I'm always like mystified that someone like AOC it doesn't see it the way I do. Again, I'm clearly in the wrong on this because it's continued to not happen.
I mean, yeah. I mean, if you think about some of the core constituents of the American left, right? Folks who are immigrants who rely very much on cross-border transactions.
For sure.
I mean, these
For sure.
companies are ripping faces off, and stablecoins provide.
Absolutely. Have been for decades.
Yeah, I mean, in
For
terms of cost and
decades.
speed, stablecoins provide an amazing alternative.
Especially cost, though. I mean, I don't know the exact figures off the top of my head, but for decades, people every time they want to send money cross border back home, and they're just sending. If you're a working class person and you're trying to send money back home, and they'll take 7, 10 points or more every time you want to send $100 back home. For decades, people have had this problem. So the fact is that what we're building in this industry can solve, and in fact is solving some of these extraordinarily important issues. And so I would always really strongly push on that door. I think it's the most interesting part of what we're doing, and the most important part to me personally. But that narrative hasn't landed though. So.
Not yet.
So I can only hope that political pressure will. Maybe we'll have a 180. There's speculation that maybe Ethereum ETF is a 180, and people are kind of counting the votes and looking at the fact that we have more power than.
I think there's a huge shift happening, Matty.
Yeah,
there's a huge shift happening
because arguments like mine were not working. Arguments like mine were not working, so I hope political power will. Sorry to interrupt you.
No, there's a huge push happening. I was just talking with Mark Cuban, and he was telling me how he's really pounding on the doors in DC, plugging away at getting this issue in front of Democrats.
Perfect example of someone who approaches this issue in this industry in the way that I do, by the way. Mark Cuban is a perfect example of that. Sorry to interrupt again.
100, yeah. You guys are a bit more aligned than others. Let's walk through some of the changes happening, because this is a very interesting time in stablecoin market. You alluded to this this period, and I've been describing it similarly. This period of experimentation, this period of new entrants, new market participants, new iterations on old models, whether it's Athena to others. What do you think are the key core elements underpinning this period of change? Right. I mean, even Tether is changing as a company from what it historically has been, in addition to these new participants.
So we already talked about how part of the wellspring of innovation is because people are looking at all the money Tether is throwing off. And then number two, because the fact that we're no longer in a ZIRP economy, zero interest rate economy, means that there's kind of evolutionary pressures as well. But I think the bottom line is that this is a fundamentally better product for many people in many places and with many use cases. And that's really what we're seeing. And so we talked about how people are using stable coins as an inflation hedge. And we talked about remittances, but there's all kinds of other use cases as well. I was talking to someone the other day, an American actually, and they were saying that they wanted to order a couple products from, I guess they were doing direct from factory. It's cheaper that way, I guess. I didn't quite catch all the details, but the point is that they ordered from a Chinese factory and paid in USDT. So there are all kinds of things. When a lot of commerce on Chinese borders with certain countries is conducted in USDT. You could think maybe Russia, countries like that. A lot of it's done in USDT on the border to border, near the border on both sides. There's tons of business that's happening using stable coins, and the reason is that it's a fundamentally better product. The friction that we see I have many of us have one headache with our bank every 2 seconds. I was talking to an Asian business friend the other day, and he was talking about like every time he wants to send take care of his mom, send her some money or whatever, and the bank is like, why are you sending $20,000 to this person or whatever? It's like, man, I'm a VIP customer. Stop asking me about why I'm sending money to my family members. It's none of your damn business. Like all of us have these headaches all the time, and we are all fun. These companies are like Comcast, right? These are the most hated companies around. There's a lot of room for a better product, and that's just from the American perspective. And if you start talking about some of these other countries where the percentage of people that are unbanked is far higher, people may not even have the opportunity to be using these inferior types of products. They may not even have the opportunity to have a bank account. And by the way, let's not assume that if they have a regular bank account in a country like not even Venezuela, but a country like Argentina, the bar for having an international currency bank account is far higher. So let's not even assume that they're going to be able to have that. So I think for kind of the confluence of all of these different reasons, we're seeing that this is a fundamentally better product. And what we're seeing is the fact that this is just continuing to get traction over time, like a snowball effect. The more people that are in it's like people talk about how to value a network, and it's the square of the number of users, right? So the more people that are in the system, the more valuable this network becomes, and we're just continuing to snowball.
100%. Of course, there are also some thorns, right? The report mentions the technological and operational
Sure.
risk related to
Many storms.
stablecoins. Can you discuss some of these risks and how we can mitigate them?
So, I mean, I think that the biggest thorn, the number one thorn is that this technology is very threatening to people. And so by people, I mean, for example, what happened in Nigeria recently with Binance. That wasn't because of Bitcoin. That was because people were buying stables, right? So the fact is that this technology is going to be very threatening to a lot of governments around the world because it is so powerful. Some are going to lean in and embrace it when they realize that it's inevitable, and some are going to approach it in a different way. So I think the biggest thorn is that um, for certain regions around, I think the biggest thorn is that there's going to be not just a patchwork of regulations all around the world, but there's going to be a whole continuum of responses to this technology that is so powerful. Because once you talk about the intersection of finance and technology, that's just way more powerful than one of the two alone. And we're already starting to see, we're seeing this in the United States, but also in a much more extreme fashion in some of these other countries. That's the biggest thorn. And some of these countries will also pivot on a dime once they realize that all this is inevitable, but there's going to be a lot of headaches on that path. That's the first thorn.
The path is evolving. The regulatory landscape is evolving. What developments from your seat? I know you are someone who, unlike many other people who have spent 2 years in New Jersey, you're very worldly and global. What are some notable regulatory developments?
I don't know about worldly, but I am global. So we are very fortunate to have boots on the ground in everywhere from Greater China to India to Latin America and throughout Southeast Asia and Middle East, North Africa. So we are very very fortunate to have a really unique window on these things because the team is global and I'm a little global. I don't know about worldly though, but anyway, I think that to your point, or at least I think you were alluding to it before, we are starting to see much more, in certain places, much more sensible approaches to regulating this new industry. So I think Singapore and Hong Kong are great examples of that recently. Hopefully, with this new pivot, we'll see in the United States too. I'm not super hopeful. I think that's probably more likely Ethereum specific in the short term, but God, I hope. But I think we're gonna take these places one by one, if we have to. because it's a better product and it's going to happen. We are talking about a product that is almost 200 billion. It'll be 200 billion before you know it, in an industry that'll be 3 billion before you know it, and all this is going to happen. And the momentum is overwhelming. So people are going to have to make decisions about whether or not they want to get on the train, or just be missing out on the opportunity for economic growth. I think that's the bottom line.
Don't miss the train. Okay, so what are you expecting, anticipating for the next 6 months, 12 months? What are you on the lookout for?
What I'm hoping for is we're starting to see early signs of kind of a renewed flowering of innovation, not just in stablecoins, but in the industry as a whole. Experimentation and real traction, all kinds of thought experiments that are becoming code and then put out in the wild for people to play with. And I think some of them will take off. And I'm really looking forward to kind of the next round of innovation, because I think with the nature of our industry, everyone's been in hibernation for a little bit. So I think for sure we're going to see extraordinary innovation from some places that in ways that are really quite unusual. And I think for sure we'll continue to see more announcements from companies like PayPal and Telegram with respect to either stablecoins or other aspect of our industry where people really want to join the party. And as an example of that, let's not forget, I remember at one point, it almost seemed like I was reading that people were underwhelmed by the performance of the Bitcoin ETF launches. Maybe I got that wrong or not, but let's be clear.
In the first week, yeah.
Right. Okay. In the first week, right. So the point is, though, that I wanted to make is, let's be clear, that was one of the most successful Wall Street product launches, like, in recent years, for sure. That was overwhelmingly successful. I think it wasn't long before the Bitcoin ETF aggregate AUM easily surpassed all the 2023 launches of all ETFs. That happened pretty quick, right? Let's be super clear. That was an astonishingly successful product launch. And what that means is that these companies, they're going to be hungry for not just Ethereum ETF, but a whole lot of other participation in this economy. And so I think we're really likely to see companies that are, in the past, they would be here for a short time. They'd do some experiments. They'd spin up a trading desk, and then by the time the next bear market cycle came around, they were gone, and it was like, see you in a couple of years. I think those days are over. This business is too big. There's too much money to be made. So I think we're really going to see Wall Street firms that are going all in. I'm not talking about just ETFs. They're going to think about all kinds of other ways that they can participate in this industry. So that's the second thing that I would mention. There's too much money at stake.
They're not going to leave this time. They're going to get stuck.
I think that's likely true. I mean, first of all, you can't launch so before they would like spin up a trading desk, right? And you can wind that down when volume drops off, right? But that you can't do that with right? So first of all, they're with the type of products that they are bringing to the table already, they kind of can't do that. But I think also, just even more than that, the business is too big now. They're going to be permanently here in a big way. And I view that as a positive, an enormous positive.
And we'll leave it there. Matty Graham, thanks so much for joining the program.
Thank you so much, Frank.